Well, joining me now in studio to share his commentary on the day's market performance is Jordan Toy from Legacy Family Wealth. Jordan, hi, good to have you here with us on Business Day TV. It's lunchtime. How are the markets this morning? Because we saw strong markets in Asia. Has this now bled over to our markets?
Certainly. So it's been a busy morning so far, keeping us on our toes. Lots of SENS announcements, lots of company news. I saw you running through the headlines there. So yeah, it does seem that some of those positive tailwinds from sort of US-China talks last week, as well as US earnings season moving along sharply, continuing that sort of positive momentum behind markets so far.
Yeah. What are you watching at the moment? What are the movers and the shakers?
So at least in the US, we're keeping a close eye on, obviously we had a big week for US tech last week. I think that was very important. We still have a couple of big tech names this week. So we have Palantir this afternoon or this evening, or us South Africans, and then AMD as well today. So there's still some big names that need to release results. We obviously had some companies locally as well putting out trading updates, as you mentioned, results, etc. But I think tech is definitely, we know how much steam there is in sort of this AI theme, and we need to see that momentum continue. Otherwise, you can have some pretty significant re-ratings.
Some of the big ones have been Altron today, their results, Redefine as well. We'll be taking a closer look on that a little bit later on this afternoon on Business Day TV. What's your take on them?
On Altron, Redefine, a bit of both. So Redefine specifically, I mean, you mentioned some of the key headlines there. So their full year dividend towards the upper end of the guidance. I think some of the points that jumped out at me, their loan to value ratio sort of creeping down towards the low 40% mark. Obviously, a business that has big South African retail assets as well as exposure in Poland through EPP. But still some property overhangs in that business. So it isn't by any means the largest part of their property portfolio. But we know that there's some structural issues in the property market, oversupplies. I mean, vacancy sitting around sort of 17%. So in an environment like that, it's difficult for the property part of that portfolio to shine. But I think across the board, the market clearly reacting to those results today in a positive fashion.
Yeah, I mean, the property market has been very volatile. It certainly has. But of course, you heard what Lesetja Kganyago had to say about inflation targeting, how he wants to bring that down. But apart from that as well, interest rates. I mean, we must be looking at least another 25 basis points, which will help property companies like Redefine.
Definitely. So, I mean, interest rates are absolutely vital for the property market as a whole. You talk about sort of the longer term track record, right? So if we look at property returns over, say, 2, 3, maybe even 4 years, they're reasonable. But as soon as you zoom out even further and you pick up that sort of pre-COVID or as sort of COVID impacted the property sector, those share prices, or a lot of them, are still sort of battling relative to those longer term levels. But yes, going back to interest rates, definitely a key factor. I think that we can expect potentially some more interest rate cuts out of the Reserve Bank. It all depends on this negotiation, if I can call it that, between Treasury and the Reserve Bank. We know the Reserve Bank's been pretty outspoken in wanting to target that lower end of the inflation targeting range at the moment. It'll be key what Treasury comes out with. I think it's at the medium-term budget policy statement that a lot of people are expecting Treasury to potentially affirm that target, but we'll have to wait and see. The sort of logic behind whether there'll be more interest rate cuts is a little bit more questionable, right? In the short term, if we expect to target a lower inflation rate, you would expect interest rates, at least in the short term, to potentially be a little bit higher than they would otherwise. So we'll have to see what comes out in the wash there.
Well, what's going to happen with that? I mean, let's talk about this. Can we really get below 3% and keep it below 3%? Because between 3 and 6 has been quite realistic.
Yep.
Are we taking a chance here?
I think that there is a risk in terms of, firstly, Reserve Bank credibility. So the risk being that we advocate, or we specifically state that we are taking the 3% as the target. But when you have sort of quite high administered price pressures, we know electricity prices, etc., are well above that 3% level, that becomes a bit of a difficult basket of inflationary impacts to manage, right? And I think that it does risk damaging Reserve Bank credibility if we explicitly target 3% and then inflation sort of averages 4 to 5% in the longer term. So I think we've got and Treasury will certainly be weighing up all of these factors in terms of what's achievable, what's also appropriate for the economy with where it currently is. I think certainly lower than where we currently, or where we have averaged in the longer term, sort of around the 5% mark. I think a lower average is definitely possible. And the Reserve Bank, I think that their logic around targeting that lower level of inflation makes sense, but it's obviously got to be timed and handled correctly.
Yeah. Looking at some of the other equities as well, looking at Pepkor releasing a trading statement, what's your take?
So the market clearly reacting quite positively to that. I don't know what it's done in the last sort of half an hour, but on my way here, it looked like it was up quite positively. So group revenue up sort of double-digit percentages. I mean, we know it's a sort of a South African success story. I think in a resilient business model, it performs well in an environment that it feels like for the last couple of years or for the last decade, we've been talking about tough trading conditions in South Africa. And I think that that's a business, or Pepkor is a business that thrives in that environment, a management team that continues to deliver in sort of a tough trading environment. Pleasing to see that they're gaining market share. They mentioned that in the trading statement, as well as the fact that the fintech side of that business continues to grow. So a business that I think is performing well and hopefully will continue to do so for shareholders.
Yeah. One more thing I want to touch on as well is gold. I mean, it's this beautiful love affair story between gold miners and gold because the price has gone up. It started to drop down again, though, and people got a little bit panicky. It seems to have rebounded at the moment.
So I think gold traditionally is regarded as a safe haven asset, and we've seen increasingly a lot of retail flows. So if you look at ETFs tracking the price of gold, we've had a lot of retail inflows. So not just institutional investors or central banks buying gold, we've had a significant amount of retail investors diving into gold. So I think while it remains a safe haven asset, there is a speculative element in the price at the moment, right? And you can see that when you have sort of I think it was about 8 to 10% drop off all-time highs. So anything trading at a high price or a high level like that relative to the historical price path, I think is ripe for a correction like that. So something to keep an eye on. It's definitely got a bit more volatility in it than it potentially has in the last couple of decades.
Now, you did mention it, but your stock pick. What is your stock pick for this lovely Monday?
So I wanted to talk about Palantir. Just briefly, like I said earlier, earnings are out later this afternoon, and I think, or later this evening. For a company like Palantir that has run as hard as it has this year, it's absolutely vital, right? Not just that the numbers, the revenue, etc., which is anticipated to grow around 50% versus the same quarter last year. So a big expectation baked into the price. And I mean, I think it's up around 163% year to date. So you really have to deliver on the quarter that we're looking at now, but also the forward guidance needs to be strong, right? If there's any sort of cautiousness or a bit of backing off on the tone for what the future looks like, you might have quite a big amount of volatility and movement in that price. But for me, the reason I wanted to really talk about it is, there's some concerns around the AI trade in terms of, a lot of the earnings are coming from CapEx growth, building data centers. The reason I like Palantir is I think it's one of the few pure plays in terms of a company that is actually producing earnings from AI, not from building data centers, but from actually selling products and coming up with new and innovative things to sell that is utilizing AI. And I think that is quite an interesting one. I mean, you talk about Meta. Meta is one of the few that potentially, it's harder to quantify, but is claiming that their ads are a lot more targeted through AI. But outside of that, there's not a lot of pure play AI companies generating earnings from new products. So that's one that I keep a close eye on, and it's the biggest market cap name reporting this week. So we'll see what happens this evening.
I love that. Somebody's actually doing something. It's not talk, you're actually doing something. We're seeing your product.
Yep.
Very nice. Jordan, thank you very much.
Thank you.
Great to have you on the show today. That was Jordan Toy from Legacy Family Wealth.